And welcome to the Pleasant Street Podcast with your host, Taylor Nissi. Taylor, good to be with you. How are you?
Doing well, Bill. Good to be here.
It is nice to see you again. This is your second official podcast episode. The first one, we spent some time getting to know you, a little bit about your values, what drives you. Today, we're going to focus in on the practice. And we're going to learn a little bit about what drives it, what the values are, and how you treat your clients. So let's dive in without any further ado and give us a little bit of history behind the practice.
Sure. So our firm, Pleasant Street Wealth Advisors, was founded in 2018 when my father and I merged our two businesses that we had both built independently to create our firm as it exists today. And the name Pleasant Street comes from the street of where our family home is. It's on Pleasant Street in Groton, Massachusetts. And when we were thinking about a firm name, we thought Pleasant Street Wealth Advisors would be a great one.
That's great. Does anyone still actively live in the house, or?
Yeah, my parents are still there, but okay. They spend most of their time on the Cape or in Florida, so not a ton of time.
Right. So it's still in the home. Well, tell us a little bit about the logo. I'm in the Northeast. I see a lot of pineapples around, so seeing a pineapple isn't that unusual for me, but for some folks, they may be thinking, wait a minute, why is there a pineapple on a White Plains Financial Advisors logo?
Yeah, great question. So if you've grown up on the East Coast, you probably see pineapples in architecture and doorposts and door knockers, things like that. So the significance is going back to the 17th century when, people were sailing all around the world, trading goods and things like that. Captains returning from Caribbean voyages would spear the pineapple on their gatepost to let the community know that, hey, everyone's home, we're safe, and we have this bounty to share. And over time, it became a symbol of Southern hospitality. If you go down to Charleston, you see tons of pineapples and everything. And really for us, why we chose the pineapple is, our mission is to, share our knowledge generously and to help other people prosper. And that's what the pineapple logo sort of evolved into over time.
Yeah, no, it is a symbol. For those who are not familiar with it, it really is a symbol of warmth, of welcoming. And I think it's an appropriate choice in your logo, and I like it. So tell us a little bit about the focus of Pleasant Wealth Street Advisors.
Sure, yeah. So at Pleasant Street Wealth Advisors, we're focusing on helping people bring alignment to their money and their mission in life. So typically we're working with entrepreneurs, business owners, and executives with complicated, executive compensations, stock options, things like that. We are really people who are looking for a partner to help them navigate what we call the burden of success: higher taxes, complex earning, big decisions, larger net worths, things like that, where, they want a proven methodology and an operating cadence that can make sure they're sort of checking all the boxes they need each year.
No, that makes a ton of sense. And we're going to get into more of this idea of incorporating tax planning into what you do a little bit later in the episode. But for now, I want to talk a little bit about team structure. How is the practice set up?
Sure. Yep. So my father and I are both lead advisors, meaning we kind of lead the relationships. My father's client base tends to be more retirement focused, and I'm focusing more on people still in their working years, business owners who are preparing for a transition or just looking to build a great business. Executives and people with equity compensation are kind of the people I focus on. We're both supported by a great executive assistant, Penny Hawkins. She's wonderful. We also have a fully integrated accounting team, including bookkeeping, outsourced CFO, all the types of different tax needs our clients might face. And then we've got a deep bench of strategic partners, everything from, estate attorneys in the states that our clients live in to legal and a network of business and executive coaches to help our clients navigate the professional world and accelerate there where they're looking for it. And then we are also supported by a wide range of institutional level asset managers. So, anything you can do at, the big brand firms, we can do, and we can customize solutions to meet our clients' needs.
When I picked on something that you just said. You said states, plural. which would tell me that you are not just serving clients located in New York State where you are. Where are your clients located?
Yeah, so we do serve a national audience. We've got a lot of folks in the Northeast, Massachusetts, Connecticut, Rhode Island, New York, Maine, Vermont, New Hampshire. But we also have a pretty significant client base in Chicago, and then on the West Coast in San Francisco as well. We're growing rapidly, so we are seeing people from all over the place.
I note with a little bit of irony that all of those states have high taxes. So,
yes, they do. Yes, they do.
Why does that not surprise me? You were talking about team members. What do you look for in people that you recruit to work for you and become members?
For anyone that's going to interact with our clients, we want them to have a high level of empathy and to really take the time to listen and understand anything that our clients are going through, good or bad, and kind of be dialed into that side of things. And then when we're thinking about strategic partners, the people that we're going to bring into relationships to support our clients, we're looking for people that work intentionally, that have a very structured process that we understand and we believe in. And then also people that value integration, right? We talked about how we've got tax partners, estate partners, legal partners. We want partners that will work together in pursuit of the client's goals. People that understand the value of teamwork and collaboration.
I'm intrigued by this notion of integration just a little bit because when you're talking with a typical corporate class, you've got executives who are used to working with team members. They're used to the idea of integration. But entrepreneurs, it seems to me, are a different type of individual. And many of them tend to be more solo in nature, I guess. Not that they don't understand the value and the need of a team or anything like that. So how have you found that working with them?
So I think that, entrepreneurs are inherently smart people, right? They're also risk takers to a certain extent. And, what entrepreneurs tend to value and understand the most is honestly, it's control, right? Mm-hmm. They are totally fine having 80 to 90% of their net worth tied up in their business because they control it and they understand the economic changes and the risks and everything they're doing. So I think that entrepreneurs like that level of control. So when we engage with them, we want to help provide them with perspective. We don't want to take control. We don't want to tell them, you have to do this, but we want to give them tools and resources that can help them kind of see the whole picture and get that perspective to make better decisions. So when it comes to working with entrepreneurs, one other thing that often we see is as a business is building and growing, you're going to meet different challenges at different times, right? With that first big successful year, it's like, oh, all of a sudden I have a tax problem. I need a CPA. Then all of a sudden you might have a family and you need to get an estate plan, and you might have that, pile of cash that happens from time to time. And so you're going to give some to this person. And so they end up with what we call siloed planning. They've got a team of individuals working on individual parts of the plan, but the plan itself lacks that integration, right? One party is not talking to the other, and we see a lot of gaps in planning occur there. So again, we really value the integration, and that's what we try to help our clients get. We try to help them understand and distill their vision, and then we try to make sure that that's understood by everyone else working on the team. So instead of, a team of smart people working, we've got a bunch of smart people working as a team, if that makes sense.
No, it makes total sense because in my experience, I've found that entrepreneurs, are big risk takers, but more importantly to this conversation, they're not always great managers. They're risk takers. They're visionaries. They're driven by ideas, but they're not necessarily the best in terms of organizing and managing things all of the time. So this makes total sense.
And they're being pulled in a million directions, right? The business has constant demands. Your employees have constant demands. If you've got a family, there's constant demands. So they're very distracted, very busy.
Very much true. So how do you meet new clients? How do you go out and seek new clients?
Yep. So most of our clients have come through us through referrals from current clients or strategic partners that we've built a relationship with. Yeah. And they identify someone that's like, hey, you need to talk to Taylor and the Pleasant Street team. But right now, we're focusing on building our digital footprint. That's why we're launching the podcast. We want to get our process out to more people. We want to engage with more people. So we're really excited to lean into the digital space more.
So what is it when a client meets with you and says, hey, another one of your clients referred me over to you? Tell me, Taylor, if we're going to work together, what makes it different? What makes you different?
Well, I think the big difference, well, to step back a second, when you think about the financial service industry, right, the industry itself is designed on focus on selling one size fits all solutions to the mass affluent. So, people with 100,000 investable assets to 1 million. And there's tons of solutions that, work for that demographic and work well, and not knocking them. But for the folks that we tend to get referred to, they typically have a little bit higher of a net worth. They might have a closely held business. They might have very complicated compensation with stocks and, things like that. So, those solutions don't always fit their needs. And if you recall last episode, the first episode, we talked about kind of the history. And I kept running, when I worked at, one of the big institutions, we kept running into all these small little conflicts, right?
Mm-hmm.
You can't talk to your clients about taxes. You can't talk to them about estate planning. So, it was really a product driven environment. And, after being there for 5 years and kind of learning the business, we set out when we launched Pleasant Street Wealth Advisors to build a process that met our clients where they were and that could meet their needs and help them, again, get that perspective so that they could make better solutions, better decisions, instead of focusing on pitching strategies and solutions. So, our process is really designed to be an innovative approach that follows, what the client's goals are. We always spend the beginning of the year focusing on vision and values. And then from there, we're communicating with the rest of the team, the CPAs, the estate attorneys, anyone else that's involved, to make sure that they're staying up to date with any changes in the client's mission and values. And then we're doing all the other stuff, right? The investments, the balance sheet, cash flow management, all of those types of things throughout the course of the year to make sure that every year we're following a methodology, a process, so that no stone's unturned, no risk shows up unexpected. And, we're keeping our clients, money and wealth structure aligned with whatever their goals are and the people that they want to support and other things like that.
So you're talking about, it sounds to me like, and this is what I want to ask you to correct me if I'm wrong, you're talking about people that have a high net worth, might be managing a somewhat higher level of income. And so they're going to need a different kind of service, if you will, from what they may get at another financial advising practice. Is that right? Am I correct there?
Yes, you're hitting the nail on the head. Mm-hmm.
So what do you do? Let's say I'm a client again. I'm going to continue to be that client. And I come to you and I say, yeah, I'm with somebody else now, but I'm just not comfortable. And I feel like I might not be getting the service that I need. I might be maybe even being underserved. Mm-hmm. What would be your response to that?
This is what we do in our first meeting when anyone wants to engage. We can schedule a 20-minute call anytime and we'll just kind of talk through some general questions. But, when I think about someone being underserved, there's a couple things I'm always going to look at. Do you have a proactive plan for taxes? Meaning, are you meeting with your team, whether it's your financial advisor, your tax advisor? Are you meeting with them 2 to 3 times throughout the year to ensure that your strategy is aligned with your income? If you're not, you're certainly being underserved. Are you semi-annually checking in with your estate attorney and your other risk people? If you've got a business, your buy-sell insurance, or your disability and life insurance if you've got a family. Are you checking on those things 2 to 3 times a year? Because so often people choose strategies once and they just sort of set it and forget it. But life changes and the things that matter change. And, the thing we talk to people all the time is the more zeros in your net worth, the bigger and more painful mistakes become or gaps in planning become. So, we can work through some questions to assess some of those things. But generally speaking, I maintain that if we can adjust the right things at the top, if we understand the vision and the mission, and we can put in place the structures and strategies to get you there, that's going to handle 90% of the problems. The problems emerge from gaps in planning when you've got professionals who are not communicating and don't understand what the goals are. Or if we just sit back and say, well, I did that 5 years ago, and it's probably the same thing that's going to get me to where I want to go the next 5 years. You're probably missing opportunities, and you might have some dangerous gaps in your planning.
Yeah. Yeah. I am intrigued by the fact that, just like I was in the first episode, the idea of not being able to discuss taxes and clearly taxes are one thing that impact all of us. And you talked about the fact that your practice has a proven method of dealing with it, and you called it your strategic wealth operating system. Can you talk a little bit more about that and tell us what that entails and what it does?
Yeah, so the strategic wealth operating system is the branded process that we follow for our entrepreneurs or executives with equity comp. And it's really an innovative approach that's designed to make sure your wealth strategies are staying aligned with your life. So in the beginning of the year, we're talking vision, values, balance sheet update, things like that, communicating to the rest of the team. In the spring, even if you're a business owner who's not filing taxes until October because you're going to extend, we're still going through the full tax projections, all that type of stuff. If you're a W-2 employee who is one of our clients, we're doing all that tax planning, from January to get you ready for tax season. Mm-hmm. And then immediately when it comes to tax, we're looking at your return, we're analyzing it, we're looking for opportunities to optimize through the rest of the current year, right? Because by the time we're looking at taxes in April, there's not much you can do. You've already had the year.
That's where you have that pit in your stomach when your accountant calls you up and goes, this is going to be the bill. And you're like thinking, but couldn't there be a better way? Not at that point. No.
Yeah. So we're identifying all of those opportunities in April, kind of talking through, hey, this is what we should be thinking about this year. Here's some things. Let's talk about them. Mm-hmm. If it's something we want to move forward to, we're bringing in those other team members, right? The integration. We're talking to the estate attorney if we're to do some charitable giving. We're talking to the CPA if we're thinking about, different ways of withholding or estimated taxes, or putting in a safe harbor 401k plan so we can maximize an owner's personal savings. So all of that stuff we're working on in the spring. And then over the summer, we're looking at long-term, vision and values. Again, we're looking at risk, estate, insurance, all that. And the whole time in the background, the investments and the cash flow are being managed. And then this time of year, again, end of year, we're kind of back to taxes right now. We're talking with our clients right now in November. Hey, here are the last end of year levers we can pull. We're putting together full year 2025 tax projections. So there's a very clear picture of here's what we expect the tax bill to be. And if you want to change it, here's the 3 or 4 things you could think about. And then we talk through them with our clients. Again, it's all in a consultative manner. We want to give our clients perspective and then let them make the decisions.
So do you have certified accountants working for you? So if a client comes to you, do you have estate attorneys that work with or that work for you? So that when a client comes in and says, well, look, here's all my stuff. And here are all the companies and businesses that I've got juggling up. And I'm going to stay with the example of an entrepreneur because they're the most complicated. Mm-hmm. Are you ready and willing to say, oh, that's great. Welcome on in, because we have the CPAs. We do have the estate attorneys that we can work with. Or how does that work in that kind of case?
Yeah. So I don't own a tax practice. We don't have any CPAs on staff, but we have 3 or 4 companies that we have great relationships with that do great work with our clients, that we spend a lot of time with them outside of busy season, right? For them, they're really busy in April. They're very busy in October. We spend a lot of time between those windows going through our process, talking about our clients. Hey, when we were working with Bill, here was this thing that came up. How could we do that different? Okay, cool. Should we do that for all of our clients? So that's how it works. They're not necessarily on staff, but again, we'll give 3 or 4 recommendations for referrals. We'll talk about the differences, and then our clients will ultimately choose whoever they're most comfortable with.
Great. Well, that's perfect because it kind of answers this next question, which it leads to, but what can clients expect when working with you?
Sure. Yeah. So I think, the first thing that people can expect is Again, we're going to lead with empathy. We're going to meet you where you are. We're going to understand what's important to you. And we're going to try to help you crystallize what you want life to look like in the future and what your vision and values are. And then from there, our mission is to create clarity, right? We want to create a one-page document that's going to summarize. It's like an executive summary of a financial plan. It's not a thick 50-page paper, but really one page that clearly summarizes what your goals are, what your mission is, and give you time-based deadlines for doing the different things that we see as issues and opportunities.
Interesting. So when people are listening to this, and they're not clients of yours already, and they're thinking this is interesting, what can they expect when they arrange that initial meeting with you?
Yeah. So our initial meeting process, and this is for everybody, is what we call our core process. It's a 4-meeting process or 4-conversation process. That is the first one, again, is focusing on clarity. We want to get a clarity of mission, a clarity of purpose, a clear picture of where you are today, just verbally. We're not going to get any documents. We're not going to exchange any information. But, generally speaking, how much cash do you have in the bank? Generally speaking, how much are your investments? Things like that.
Right.
And again, the takeaways from that core, the first meeting, the clarity meeting, is that executive summary. The second thing, if we agree, walk away from that saying we should have another conversation. The second meeting is organization. So now we are going to exchange information. We're going to give you access to our software platform. You're going to be able to build, the first draft of a financial plan. In that organization process, if you're a business owner, we are doing a business valuation. This is an estimate of value. It's not a certified valuation, but it's a very accurate assessment of the current value of your business today. And then also a couple things that can point out strengths and weaknesses. So that's tremendously valuable for a lot of the entrepreneurs and business owners we work with. The R stage is review. This is where my team and we get together. We look for any sort of issues or opportunities, right? Issues are things that need to be addressed either today or within, in the future, because they could evolve into problems. And then opportunities are things like making sure that we've got all of the funds working for us. We don't have idle cash sitting in the business that far exceeds what we expect to spend. Anything that we can do to improve taxes or estate structure. So we're going to create a big, long list of all the issues and opportunities in the review meeting. And then the final step is execute. So we're going to share all of this with you. We're going to put it into a plan with timeline, with deadlines and all that stuff. And we're going to talk about what working with our team would look like. So that's everything that happens in the initial meeting process.
Interesting. So if someone is listening to this and they want to reach out to you to maybe have at least that initial conversation, how do they get a hold of you?
So the first thing is everything that I just described, it's all a progression. So you're not committing to anything beyond a conversation at any one time. And the best way to get a hold of us is to click the link in the show notes, and you can schedule a 20-minute phone call with me anytime. You can also find me on LinkedIn, shoot me a DM, or visit our website, pleasantstreetwealth.com.
Great. That is fantastic. And I would encourage you, if you're listening to this podcast and you don't have a relationship with Taylor already, I think you'd find it worth your time to explore. He is what he sounds like. This is what you're going to get. So I would encourage you to do that. The other thing I would encourage you to do, which is really easy and costs you nothing, not even time, is hit the follow button, become a subscriber. Because now that you are a subscriber, you get notified every time Taylor drops a new episode of his podcast, and you won't miss anything. And Taylor, speaking of not missing anything, what have we got planned for our next episode?
Yeah, so for our next episode, we are going to meet with one of my favorite people, a client who has sold a software business, and we're going to talk about, the journey from startup to significance and kind of the different things that he learned along the way, building his software business and through the exit and how it's changed, his life, both personally and professionally. So I'm really excited to sit down and share the mic with him.
Oh, no, that should be absolutely fascinating, actually. And I do subscribe. You're not going to want to miss that one because way too many business owners don't think about that exit. They just don't think about that exit. And it's going to be interesting to hear what his story is. Folks, if you like this podcast, can I ask you to do something? tell people about it. It's really simple. Share it with people. Say, look, this is interesting. This guy said some useful things, some things I didn't know. Because word of mouth promotion is very much appreciated, especially in this day and age when we've got bots, literally bots, algorithms recommending things to us. Word of mouth from a person makes a really big difference. So we would appreciate it if you would recommend this podcast to others. Until next time, I'm Bill Tucker on behalf of Taylor and everybody at Pleasant Street Wealth Advisors. Thank you so much for taking the time to listen, and we'll catch you next time.
Thank you for joining us on the Pleasant Street Pod. Be sure to follow the show so you never miss a new episode. To learn more, visit pleasantstreetwealth.com or give us a call at 518-363-9363. The views and opinions expressed in this podcast are those of the guest and do not necessarily reflect those of Pleasant Street Wealth Advisors, LLC or Farther Finance Advisors, LLC. This content is for informational and educational purposes only and should not be considered professional investing advice. Always consult your financial advisor or another qualified provider with questions about your investment planning.